Good evening, ladies and gentlemen, and welcome to this week's Strategy of the Week for January 3rd, 2014, An Industrious Way to Make Money. This is Kevin Crowe, Manager of Retirement Services, and I'll be your host this evening. In a recent Strategy of the Week, I shared the following observation, that some people make things happen, some people watch things happen, while others wonder what in the heck just happened. The current market condition has the potential to pull people in one of the aforementioned directions, and it is in that spirit this evening that we will revisit our Strategy of the Week of February 22nd of 2013, An Industrious Way to Make Money, with some enhancements to put you in the first category of proactively making things happen while being prepared if they do not. Let's look at our objectives this evening. We're going to look at and know and understand when to buy. And when to buy means market direction, industry group direction, and stock direction. What to buy? We're going to have a very specific way of picking the stocks using fundamentals as well as technicals. Third, how to buy. We'll have very precise entry and exit opportunities, as you'll see in a few moments, and when to sell. We will sell at a predetermined point, either in terms of profit or a change in market direction, such as a confirmed down, or price breaking below our 10-week exponential moving average. So let's look at when we buy. We're going to buy on a confirmed up. We'll also make sure the MTI is moving higher week over week. Again, market direction in our favor. We also want it above 1.0. And the VectorVest composite must have closed above its 10-week exponential moving average. What will we buy? Well, we're going to select top stocks from top industries that have a growth rate greater than 15, price equal to or greater than 25, average volume equal to or greater than 30,000, a recommendation equals a buy or a hold, and RV, RS, and RT greater than 1.0. Let's begin by going to our home page. We're going to click on Graphs. We're going to click on Market Timing. We're going to have a weekly graph. We're also going to add an exponential moving average, a 10-week exponential moving average. And we'll activate our confirm calls. And on the week of 9/9/2013, you can see we did have a candlestick close above the 10-week moving average. And even though we have the benefit of looking at the past in the present, we can see that the MTI had a very nice run up for a number of weeks. In terms of our chart setup for the stocks that we'll be evaluating for purchase, we're going to use an 18-month price chart, and that again is a weekly price chart. We'll use a 10-week moving average of price. We'll also include volume and a 10-week moving average of volume. So let's begin by going back to our home page. We'll click on Viewers. We see the current date of 1/3/2014. But we want to go back to September the 9th, which was the week of the confirmed up. We'll click OK. We'll confirm that has changed our date to 9/9. So on 9/9/2013, I took the liberty of sorting the industry groups by CI. And our first industry was diversified industries, followed by insurance, transportation, rail, transportation, ship, and media in the top 5. So now I'll come up here to diversified companies. I'm going to right click. I'm going to click on View Stocks and Industry Group, and I'm going to select the first stock that meets our buy criteria. Well, right away we see Council Corp at $2.58 does not meet our buy criteria. CCL.B at 71.55 meets our price, as it meets our RV, RS, RT. Scrolling to the right, we also have a recommendation equals a buy. Our growth rate is 18. And let's look at volume. And our average volume had to be a minimum of 30,000. And as you can see here, it met our minimum by some and more of 37,200. So now I'll come back up here to CCL.B, and I'm going to right click. And I'm going to go to View Stock Graph. It shows an end of day, which I'll change to weekly. Please note weekly, not end of week. And the weekly chart will give us a Monday through Friday look at the candlestick. I'm going to come down here to 18 months. I've got an exponential 10-week moving average of price and a 10-week exponential moving average of volume. I'm going to activate our confirmed calls and move our date line to the week of 9/9/2013. Let's note, please, that the high price on 9/9, the week of 9/9/2013, was $73.30. Now, one of the things we'll do to make sure we're getting follow-through in our stock is let's add 5 cents to our high price of $73.30, making that $73.35. Additionally, I'm going to come down here to the lower left-hand corner. There's a left pointing arrow, and I'm going to left-click on that, and I'm going to push price all the way to the right, so the only thing is showing are the last week, which is 9/9/2013. This way I get a more realistic opportunity to assess when would I actually have bought this particular stock. So we've got a high price of $73.30. We're adding 5 cents, so we're going to buy at $73.35. Let's move forward 2 weeks. Well, we're not off to a good start because prices have come down. But have we gotten in this trade? No, because price is now at 70.24 in terms of our high, so we're still sitting on the sideline waiting for an opportunity. Let's move forward 2 more weeks. Have we got into the stock? No, because price is now, our high price is $69.16. We want to buy at $73.35. Let's move forward to the week of 10/15. Our high price is $73. It's not $73.35. Let's keep moving forward. Week of 10/28, we're still not in this trade. So finally, the week of 11/11 of 2013, we would have hit our buy point of $73.35. In fact, we probably would have been filled around 75. So let's use 75 as our point of entry. Now we have to determine at what price will we sell. Well, I try to make this pretty simple, and that is I'm going to take $75, our assumed purchase price, and I'm going to multiply that times 1.15, because I'm going to sell this with a 15% gain, which will be 86.25. So in summary, we're in at 75. We're going to multiply our buy price by 1.15, and that will give us our 15% gain. Let's move forward and see when we would have hit that 15%, or 86.25. Well, the week of the 18th, our high is $81.99. We're still not in the trade. Our high price is $81.99. We haven't hit our profits yet. The candlesticks are still well above the exponential moving average, and volume is getting stronger. Let's move to the week of 11/25. Well, our high price on 11/25, the week of, was 87.72. Our sell price with a 15% gain was 86.25. So that trade would have been closed successfully at 86.25. So now let's go back to our industry viewer. And our second industry was insurance general. And this is going to be the industry group from which we'll take our second selection. We'll right click. We'll go to view stocks in industry group. And again, we'll select the first stock meeting our criteria of $25 or greater, a growth rate of 15 or greater, RV, RS, and RT all greater than 1.0, or our recommendation must equal a buy or a hold. Well, our first company, Independent Alliance, meets our price, it meets our RV, RS, RT, our recommendation equals a hold, our growth rate is 15, and it also meets our average volume requirement of 30,000 at 171,300. Let's right-click on Independence Alliance, come down to View Stock Graph. We're going to change from end of day to weekly, 18 months. Verify we have both our exponential moving average 10-week of price and volume. We activate our confirm calls. We move our date line to the week of 9/9/2013, and left-clicking on the left arrow, we're moving our date line all the way to the right. So only the date line and the date of 9/9/2013 are showing in terms of current price. We notice our high price for the week is $43.40. Using our same rule as we did in the first situation, we'll add 5 cents, making this 43.45. So let's move forward a week and see if we get into our trade. Well, our buy price was 43.45, so certainly we got in at 43.45 because our high price was 44.44. So we'll use 43.45 as our buy, and we're going to multiply that times 1.15, which represents a 15% gain, and that price is 49.96. So when price reaches 49.96, or we have a candlestick close below the 10-week moving average, or we get a confirm down, we will sell. A week later, we haven't hit our sell price. 2 weeks later, the week of 9/30, I continue to move forward. The week of 10/7, we're at 44.99 in terms of our high. I'm going to always compare it to our high price. Let's move forward another week. We're at 46.44. We still have a way to go. Going forward 2 more weeks, so the week of 10/28. So we're still in the ball game because our high price is 47.64. We're looking for 49.96. We go forward another week to the week of 11/4. On 11/4, you can see that our high price was 49.99. So we certainly would have sold at 49.96 and accomplishing our goal of a 15% gain. Now notice, price is still well above its 10-week moving average. Volume is getting stronger, but we're going to stick with our discipline of selling with a 15% gain. Now, is there a magic to a 15% gain? No, you could use 10%, 12%, but I would suggest in order to develop good trading habits, start with a small, modest gain and develop the correct habits, and then gradually grow your profit margin as you go forward and have more experience. Let's go to our third industry group, and I'm going to go through this rather quickly now that you've seen the process. 9/9 is our date. I'm going to go to View Stocks in Industry Group. Canadian Pacific Railway meets all of our criteria of price, RV, RS, RT. Our recommendation is equal to a hold, and our average volume is 319,000 shares, and it also has a growth rate of 19%. So very quickly, I'll right-click. I'm going to go to View Stock Graph. I'm going to change from end of day to weekly, 18 months. Activate our confirm calls. Move our date line to 9/9 of 2013. Move our chart all the way to the right. Our high price is 128.33. If we add a nickel to that, that makes it 128.38, and that's the point at which we would buy. Let's move forward a week. So during the week of 9/16, our order likely would have been filled at that 128.38. And if we multiply that times 1.15, then our sell with a 15% profit will be at 147.63. Let's scroll forward. And it looks like on the week of 10/21 of 2013, our 15% profit of 147.63 would have been made, and we would have closed the trade. So let's summarize what we've looked at and what we've determined this evening. First of all, we've taken a really good look at when to buy in terms of market direction, industry group direction, stock direction, what to buy. We chose stocks in top-rated industries that met very stringent fundamental criteria, and we went in with a very specific buy point of using the high plus 5 cents, and when we got our fill, we made a determination of when to sell, which would be at a 15% gain, and we determined that by our entry price times 1.15. So we had the discipline of selling with a 15% gain. As I stated a moment ago, we were buying stocks from the top-rated industry groups, meeting our buy criteria. Third, we used a conservative implementation strategy. I would characterize the strategy of an industrious way to make money as a prudent strategy, but we used conservative implementation. As a consequence of the process, we had control. We had control of the process, and having control of the process gives us control of our emotions. So we don't make decisions that we're hard-pressed to make because markets are moving up, moving down, or we're listening to news. We've got a process that we're sticking to in terms of when to buy, what to buy, and when to sell. As a consequence, We are developing successful buying and selling habits. We have a plan, we implement our plan, and we do this over and over and over. I hope you found this evening's presentation helpful. This is Kevin Crowe, and I wish you a great weekend.